Hey guys, it's Tex. In this video, I'm going to talk about Fibonacci retracements and how you actually use them. So some of you following my videos for a while have seen that I've used fibs before, and admittedly I don't really use them as much, but I will still occasionally throw a fib on my chart just to kind of get an idea of where the price action is in relation to the fib levels, but I don't usually leave them on my chart. I used to always draw it on my chart and leave it on there. But you can use it several different ways. You can use it when determining, percentages of a move based on the trend, for example, like on a daily chart or something. But you can also use it like on a gap day. If a stock gaps up or gaps down, you can use a fib on those days as well. So there's a few different examples that I'm going to give you in this video and show you how I personally use fibs whenever I do use one. So looking at the SPY, obviously the ETF that tracks the S&P 500, been in an uptrend since the low here in December, and you can draw a long-term fib. So using Thinkorswim, I know a lot of you guys use this platform. You come here, this icon looks like a percentage icon. If I wanted to draw a long-term fib, taking into account the uptrend from December, I would come to the low, and then I would draw it up to the high. Okay, so we're going from the low to the high because we are drawing the fib throughout an uptrend period. And what this is going to tell me is where is 50% of the move throughout this trend, right? So if we've been trending up this entire time and then we start to pull back, where is a 50% retracement of this entire move? Well, that's right here at 264.36. Now you want to try to get this as accurate as possible. So you would come in here and see what is the actual low of this candle, what is the high of this candle, and you would actually edit your values here to reflect to the penny, right? The high and the low. But I'm not going to do that right now. I just wanted to just roughly draw it on here and show you. But right about 264.36 would be the 50% retracement. And I had mentioned in my long-term investing videos, in case you missed that, I was starting to invest an account that I had inherited throughout this pullback here. And I really wanted to see the SPY pull back down to this 264 area, 265 area. Because first of all, that would have been the 50% retracement. And second of all, you can see there's a lot of support right around in that area, right? We sold off in October, bounced up, caught support again, bounced up, caught support again, tried to hold, then failed big, right? So there's a lot of support right here in this area, which also coincided with 50% retracement of this pretty stellar move higher from those lows. So I really like that 265-ish area for really loading in some long-term investments. But unfortunately, we actually bounced well before that. We didn't even come down to the 38.2. So drawing kind of a long-term Fibonacci retracement allows me to see, where are those levels. And when we're talking about fibs, you've got your 0%, you've got your 100%, and then you've got levels in between. Now the default fibs are going to show you like 25%, I think, and 75% as well. The only levels that I'm most concerned about between the 0 and the 100% are the 38.2%, the 50%, and the 61.8%. Those are the three most important levels that I care about on a fib. So I've actually customized my fib to only show these levels between the 0 and the 100. Okay. Now, if I wanted to draw kind of like a short-term fib, which is what I use more often, if we zoom in here, during this, when we started to pull back here, this is May 1st, and this was a new high for the stock market, and then we started a pullback, okay? So if I'm watching this here, this pullback is happening, we come down here, and then we start to bounce here, right? So say we're looking at this chart on this day here. Let's do it this way. Let's pan over, select our hand tool if we can. Pan over to that day. Was it right there? Yeah, it was right there. So we'll bring our chart down. All right, expand it up. There we go. So we're looking at it here on this day, all right? We've set in a new short-term downtrend. We started to sell off, and now we're starting, it looks like we may be starting to bounce, all right? Ignoring, we don't know what happened here. Just ignore all that stuff that already happened. Hindsight, we know what happened, but just pretend you don't know, right? So you're looking at it on this day, and I'm wondering, okay, looks like this may have been a bottom here. Maybe not a, a permanent bottom, but certainly a bottom, and we could be bouncing up. So I'm wondering, what is 50% of this pullback here? And that's a pretty important level that I would definitely be looking for a retracement to. So I could take my fib tool, and because this is a downtrend that we're drawing the fib on, we would go from the high to the low. So we would actually want to right click on this, go to edit properties, and so the high of this candle was technically 294.95. So we'll put in 294.95, and the low where we drew the fib to of this candle was 279.93. So 279.93, and then we hit OK. So our fib is drawn perfectly from the high to the low because we are drawing it in a downtrend. Okay, so now I'm looking at this, and the 50% retracement, in other words, a 50% bounce of this entire pullback here would be around 287.54, and a 61.8% retracement is up at 289.21. So if I'm looking at this as a potential bounce, maybe even a trade idea for a bounce here, I would be looking for a move up to the 50 to the 61.8. Somewhere in this area would be a good, kind of an idea of where it's most likely going to bounce to. And then the question is it going to reject off of the 50 or the 61.8, or is it going to continue higher? Okay, so if we kind of pan the chart over, we can see that actually on this day here, we came up and we tested the 61.8 to the penny and rejected stiffly off of it. So we see that it did retrace into the 50 and the 61.8 and actually hit them both on the same day. But that fib allowed us to visualize where those levels are and kind of get an idea where we're most likely going to bounce to. All right, so the question is are we going to reject off this level and continue lower, come back down, test these lows, and possibly, break those lows and sell off even more? Or are we going to have enough buyers to push us over that 61.8 and back up to all-time highs? All right, so we continue to pan over, and another very bearish looking candle, not looking good. And we're in fact continuing lower. So we keep panning over, and we can see that we actually did break below the bottom of the fib. We broke this low and we put in new lows here. So now I'm watching this, okay, and I want to see how low are we going to go, and right here. Okay, so we put in a new low on this day, and then the following day, we're looking at it here, we start to bounce again, right? So what I need to do is I need to redraw this fib. I'm going to keep the high here because I want to encompass the entirety of this pullback, ignoring the bounce here. What's our new low? Our new low here is 273.09. So let's modify our fib to 273.09. All right, so now we redrawn our fib from the same high to the new low. So that puts our 50% retracement now at 284.02 and our 61.8 at 286.60. Okay, so if we're going to bounce up and continue lower, then once again, I would essentially look for it to retrace to the 50, maybe the 61.8, and then roll over from there. If we get over and hold the 50 or the 61.8 as support, then I would kind of change more to a bullish stance from a bearish stance, because we would be moving from a downtrend into an uptrend. Okay, so we pan over and see what happens, and you can see that we clearly broke through and closed above that 61.8 retracement. Also notable, we closed above the 50 SMA on the daily chart. This line right here, right? We closed well above it. Although we did have this long upper wick, we still managed to close strongly above those retracement levels. So that kind of tells me that it looks like we're having a trend reversal here. We got our 50 and 61.8% retracement, and having this on here helped us visualize exactly where those levels are. And now as we push up, we continue to scroll over. We see that the market actually pushes up and makes a new all-time high there. Okay, so as we came up here and set in this new all-time high, clearly we broke this downtrend, so this fib is no longer valid. What we need to do is remove it and draw a new fib. So what we do is go to our fib tool. Now this time we're in an uptrend, so we would go from the low to the high. And technically, like I said, what you would do is you would look at the actual low here and modify it so that the low here is exactly what this low is and the high here is exactly what that high is, but I'm just not going to do that right now. Let's just try to keep the video as short as possible. But the important thing is we broke the downtrend and now we're back in an uptrend. So we've redrawn our fib from the low to the high instead of the high to the low, right? Low to the high for your uptrends, high to the low for your downtrends. And that tells me right here, right? So now our high is up here and we are starting to pull back. Where would I look for this pull back to? Well, in order to, see this remain in favor of the bulls, ideally, I would like to see it pull back somewhere between the 38.2 and the 50%. As long as we hold above that 50% retracement, then that just tells me that we made this move higher, back into an uptrend, pull back to the 50%, hold it as support, make another move higher, and new all-time highs. Okay. Ideally, in this particular case, though, I'd rather see the 38.2 hold because we do have that 50 SMA kind of coinciding right here in this area, and the 50 SMA often provides it's pretty well respected, especially with the index ETFs. But it's very possible that we could come down to the 50 if we continue to sell off. We're actually starting to curl back up here. But if we sold off to the 50 and held, I would still remain bullish. Breaking below the 50, then now I'm actually going back to a more bearish stance and might consider redrawing the fib in that case, right? If we're looking at a potential downtrend, then I would redraw the fib for a downtrend. But right now we are back in an uptrend. So that's how I draw fibs when we're talking about trends, specifically like on a daily chart. And like I said, the most important levels that you want to have on there is definitely the 38.2, the 50, and the 61.8. Now on my fibs, I actually added extensions that go beyond the 0 and the 100%. And that just kind of tells me how extended a stock is beyond a fib that I've already drawn. So let's say that we curl back up here and we break all-time highs and we continue to push higher. This just kind of tells me, all right, at this level, we're 20% over that fib. At this level, we're 50%, 80%, and an entire 100% over that fib level. Same thing on the downside, right? We have the, it says 120, but essentially it's 20% below that 100% mark, 50%, 80%, 200%. So that the extensions are not really necessary. That's total personal preference. Some people use extensions in different ways. This is just the way I like to use extensions. I don't put a whole lot of weight or trade ideas into extensions. It just kind of helps me see, okay, if the stock is trading past the fib, where are we in the extended nature of the fib? Are we 20% or 50% above that fib that I drew, right? So if you want to set up your fib like this, all you have to do is throw a fib on your chart, right click on it, go to edit properties, and you'll see here all of your coefficients, and you can click add curve, and I think you can add as many as you want. But the most important ones is your 0%, right? And then you've got the 38.2, the 50%, the 61.8, and the 100%. And then above that, you've got extensions here. So I have -1, -0.8, and so on. And then below the 1 here, we've got extensions at 1.2, 1.5, 1.8, and 2. So if you want to set yours up like mine, this, kind of pause the video or whatever. This is how I set mine up. But the fib is actually technically from here to here. This is your fib. Above that is extensions. Below this is extensions. And then you can set the color, style, width, whatever you want. It's all personal preference, but that's how I set mine up. Do what you want with yours. Find what works for you and do that. That's the most important thing. Everyone has different trading styles. So if fibs are for you, great, use them. If they're not, don't, right? Just want to kind of make a video and show you how I use fibs when I even do use fibs. And then once you set your fib up, just click on save as default. And then from then on, anytime you draw a fib, it'll draw it exactly how you saved it. Okay. So that's really that's the most important, or that's the most common way that I'll use a fib, particularly on a daily chart. I'm just going to remove that drawing. And before we go, I'll show you an example on an intraday chart. So this is actually a trade that I took. I just posted a trade recap on this. This is again the SPY from this last Friday, and we opened with a gap up. So on gap days, either gapping up or gapping down, fibs can also be useful to help visualize that gap. Okay. Now the way that I usually draw a fib when we gap up or gap down is from the previous close to the current open. All right, so once the market actually opens, I'm talking regular trading hours, not not after hours and not pre-market, regular trading hours. We select our fib tool, and here's the close on Thursday. So we start the fib there, and we draw it up. In this case, it's a gap up to the open here on Friday. Okay, so there's our gap. So what I'm discerning from this is, where is 50% of the gap fill? Right here. Here's our 50% retracement. So gap fades are one of my favorite strategies to trade. When we have a gap up or a gap down, not always, but a lot of times these stocks and the market ETFs will retrace at least some of that gap. Sometimes they won't do it on that day, though. That's the trick. Sometimes they'll retrace, they'll fill that gap on another day or something, right? But a lot of times they will. They'll retrace at least some of that gap on that day, especially if it's a big gap, right? People are going to take profit. People who were long overnight are going to take profit on that gap. That's a gimme. They're going to take profit. So on this particular case, what I'm looking for is generally about a 50% retracement. And 50% kind of seems to be the golden number when it comes to retracements. When a stock goes parabolic, for example, a lot of times you can kind of expect it's going to retrace 50% of that move. When a stock gaps up or gaps down, a lot of times it'll retrace 50% of that move. Sometimes you're lucky and you'll get a full gap fill. But by putting the fib on here, it actually helps you see where those levels are. So we're drawing it from the close on Thursday to the open here. Again, here's our 50% retracement. And this is a trade that I took. I took it right here when it was rejecting under VWAP, also not on the chart, but there was a resistance level from the pivot point study sitting right here. So there's kind of two pieces of the puzzle sitting here acting as resistance. I took the trade here, risking off high of day with a target at 50%, which was also coinciding with the previous day's high. Again, two pieces of the puzzle, and I've stressed that in previous videos. It's best to always take a trade when you have more than just one thing telling you to take the trade. If you have kind of multiple pieces of the puzzle coming into alignment that's just screaming at you to take the trade, those are the types of trades that you really got to take, and this was one of those trades. The target on this was half the gap fill, 50%, which also coincided with the previous day's high. Kind of zoom out here. Here's the previous day's high right here. So you can see that it fell in line perfectly with that 50% retracement. So that was a beautiful trade. I mean, I actually didn't have to draw the fib on my chart. I could kind of clearly see if we remove that, here's our gap. I can clearly see that 50% is right here in this area. You can kind of visualize it without having the fib on your chart. But sometimes it's useful to throw it up there, especially if it's a big gap, right? It's useful to throw a fib on there and just kind of see what exact level is that 50% retracement at, because that would be my target to take most of the trade off. And then you could leave a piece on in case it wanted to, kind of sell off and close that entire gap. Sometimes it'll do that. So that's another way that you can use fibs, and sometimes I will use fibs that way. But generally what I do with fibs is I'll just simply, just draw it on my chart, see where the levels are. Okay, it's right here. That's good. That's all I need to know. And then I'll just remove it because it just clutters the chart. I don't need to have it on there, but if I just want to visualize it and see exactly where those levels are, be it an intraday chart or a daily chart, I'll just throw it on there real quick, take a look, and then take it off. That's totally up to you guys, but just wanted to make a little video talking about Fibonacci retracements, how you can use them, how I use them, and, kind of the value in them. But I would stress that the most important thing is just keep it simple. Find what works for you and use that. Fibs may not be for you. Fibs work, but nothing is foolproof. They don't always work, right? Nothing always works. You can have the best strategy in the world. Some days it just won't work, right? So if you like fibs, if it makes sense to you, then try it out, use it, but don't try to use everything, right? Find what works for you and use that. And so with that said, I just kind of wanted to give you a little demonstration on it if you're not already familiar with fibs, and just kind of see if that's something that you guys are interested in. So let me know in the comments below what you thought about the video. Be sure and like the video if you found it useful, and subscribe to the channel for more videos like this in the future. Also, I'm going to wrap up by saying in a previous video, I talked about a giveaway for a 1-month guidance subscription to Trick Trades to celebrate 1,000 subscribers. We actually just hit 1,000 subscribers. So thanks a lot, guys. Really appreciate that. So what I'm going to do is I'll put a card to that video where I talked about the giveaway up here at the top of this video. You can click on. All you have to do is just make sure you're subscribed to the channel and comment on that video that I just put the card up on the top of the screen for you to click on. It doesn't matter what you say, just comment on that video, make sure you subscribe to the channel, and here very shortly in the next week or so, I'm going to have a random drawing of all the names of the people who commented on that video, and again, the winner of that drawing is going to get a 1-month fully paid subscription to the Trick Trades Guidance membership, so you can come over and check us out and see what we're all about over at Trick Trades. So best of luck to you guys. Be sure and go check out that video. Leave a comment to get entered into the contest. Like I said, sometime in the next week or so, I'll do the drawing. So I'll give you guys a little bit more time to post a comment on there. And then I'll make a follow-up video when we do the drawing to announce the winner. All right, guys, best of luck to you. Thanks, as always, for watching. And we'll see you in the next video.